Hello and welcome to Closing Trades here on ET Now. I'm Harsh Saita. Very quickly on to how markets are behaving, and we've not moved much, frankly. But I mean, we've edged higher over the last few minutes for sure. But on a day-on-day basis, we've not moved much. 24,400-ish is where we continue to be around. But that sharp recovery, I wonder what's playing out. I'm going to quickly pull out the Nifty index as well as the contributors to try and spot as to what's played out, because there's been surely a sharp move. When you're looking at, let's pull up the Bank Nifty first off on the screen, try and see how that one is behaving. There you go. So that's part of what has caused the move. And then the other one is the Nifty IT index. Let's pull that one up as well. Apollo Hospitals is perked up 3.5 odd percent. Bharti Airtel up 3.5% as well. Adani Enterprises, Adani Ports are the other two, both up 2% each. And thereafter, you're not seeing too many stocks with meaningful gains. Just 1% higher on Wipro is what we're seeing. In terms of the top losers on the Nifty, there's 4.5% knock on Tata Motors PV, where you're seeing that gash. 2% lower on Jio Financial. So that one also taking a bit of a knock. Asian Paints down 1.7, ONGC down 1.7 as well, and NTPC is down 1.5% in trade. The advance decline firmly in favor of the declines rather than the advances. Some bit of a recovery visible on your screen. The Nifty IT index also, not much of a recovery seen there per se, but you're still trending in the red, 1/3% lower on the Nifty IT index. I'm going to quickly also try and pull out the sectors and try and spot there as to whether anything's changing. The Nifty Media is a rank outperformer, 1% higher. But outside of that, consumption, defense are the other ones which are sitting in the green. Nifty Pharma is down 0.7%. So that's where some part of the pressure is. There is pressure on auto, 0.5% lower, FMCG down 0.5%, and metals also down 0.5% thereabouts in trade. So that's really the tilt this Friday. Let's talk about some stocks which are buzzing, 5% lower on Samman. Tata Motors PV down 5 as well. Electra Green Tech is down 4.5. We spoke with management. We'll try and give you a snippet of that conversation. Endurance Tech is down 3 as well. And we're seeing a rank and a sharp move on LG Electronics. That one is up 9% in trade. Technocraft is up 7. LG is up 6. Praj Industries is up 5, and KRBL is up 4. Really, that's how some of the big movers are behaving. Welspun Living, Indigo Paints are just some of the others. And Jubilant Foodworks is also up 3% odd. But let me take it across to Avi. He's here with some of the other stocks that are buzzing. And Avi, tell us what's leading to the buzz.
So let's have a look at some of the stocks that are buzzing in trade. Starting off from Equitas Small Finance Bank is in focus because RBI is probing the relationship between Equitas Small Finance Bank and Unico Housing Finance, a housing finance company promoted by P.N. Vasudevan's daughter. P.N. Vasudevan is Equitas Small Finance Bank's MD and CEO. So RBI is now probing the board members if they were aware of this connection and if this details was disclosed when Mr. P.N. Vasudevan sought his reappointment as the MD and CEO. So this is something that brings it in focus. They're also looking at if there are any related party transactions between Equitas Small Finance Bank and Unico Housing Finance. Up next, we have Z Entertainment. A big news coming in for Z Entertainment as SAT, which is the Securities Appellate Tribunal, has allowed Z Entertainment to go ahead with its 3143 crore rupees preferential issue, which will help the promoters raise their stake from current 4% to 24%. They've although kept the ban on the promoters, Mr. Subhash Chandra Goenka and Puneet Goenka, for 12 months and on Z for 2 months period from the securities market. They've also allowed Z Entertainment to sell their mutual fund holdings for the purpose of distribution of dividends. Up next is Ashok Leyland, a very strong set of numbers when we compare the margins with the estimate. People were estimating a margin of 7.8% while they have delivered a 10.1% margin. But when we compare it on a YY basis, we can see almost a flattish kind of growth on the EBITDA, and that could be the reason the stock is down by around 3%. Up next is Tata Motors PV. They've clearly stated that the supply chain disruptions and commodity cost inflation caused by the West Asia crisis persists as a challenge for them, and that is the reason the stock is beaten down. As far as the numbers are concerned, they're a mixed bag with revenue and EBITDA in line, but there is a big miss on the PAT margins because of the commodity cost inflation. Our last pick would be KRBL, which is up around 4% on back of its Q1 earnings. The revenue is up down 6%, but there is a strong expansion on EBITDA and PAT, while the margins have expanded from 12.1% to 20.5%, and the profit is up from 151 crore rupees to 261 crore rupees. So those were the stocks that were buzzing in trade.
Okay, that's Avi. Thank you so much, Avi, for that quick update. Let me go across. Kunal also joining us. Kunal Bothra in studio. Kunal, give us the perspective. Are we looking at the index move and that spike that we're seeing over the last few minutes? Anything significant to read into in terms of the spike?
Yeah, the spike, good afternoon, first of all. The spike, I think, is majorly because of the move which has happened to a few large cap names. I think ICICI Bank has gone to a full recovery. Kotak Bank intraday charts showing a full recovery of sorts. So these large cap stocks which are underperformers, I think these stocks have made a good comeback for themselves in the last, I think, 15, 20 minutes, half an hour or so, for themselves. So I think that's one of the reasons why the markets are showing the kind of recovery. But we were expecting a more or less a flattish move for the indices. The buyers for, I think, a majority part of the trading session today had been on the negative side. But I think we were probably expecting the index to hold on to this 24,300 support on the spot levels. We've managed to do it so far. The most interesting aspect on the data front is that we are still holding a premium of 70-75 points on the Nifty, even after 2 weeks, almost 2 weeks going into the current series. So that tells you that the markets are not ebbing off from being on a positive side in terms of the mood. But yeah, I think in terms of large cap names, you see those odd large cap stocks taking a bit of a backseat, and that keeps on acting as an impediment for the Nifty in the near term. But largely the bullish, the bias on the index is still bullish. 24,300 is a strong support, would suggest a buy in the index at current levels.
Okay, all right. So that's the tilt. Kunal, sectors, do you still stick with the same ones that we've been speaking about, or does anything change sectorally for you?
Yeah, quite a lot. In fact, so far on the monthly charts, relative strength scale basis, the PSU bank sector apparently is one of the stronger performing sector so far. I think it's till yesterday's count was up 6.5, 7.5% for the PSU banking index. So that's, I think, something to watch out for. And it's not that the large cap stocks are actually looking attractive. The tier 2 large cap names or the mid cap stocks, they're the ones which are looking attractive. For example, the likes of PNB, that's a stock which has given a breakout. You looked at, we looked at breakout for Union Bank. The stock has moved up from those 170-75 levels to 188 plus mark where it's trading right now. So many of these PSU banking names, the tier 2 ones, are the ones which I believe could be a good bet at the current levels. And of course, the usual themes, the likes of defense, the IT sector, auto ancillary, etc. These stocks, they continue to look attractive.
Okay. And stock picks, Kunal?
So two buy calls, two differentiated names. Supreme Industries is something which I'll suggest as a buy at the current levels. The stock is heading towards a very classic kind of a bullish pennant combination flag pattern breakout. The breakout level is around 3,450 plus mark where it's trading above those levels. So would look at a buy with a target of 3,600. Stop loss could be kept at that breakout point of 3,450 mark. The second would be a buy on Vodafone Idea. Again, a very interesting chart. Almost like 3 or 4 days of steady recovery for Vodafone Idea. The stock has moved up from 12.5 levels to 14 approximately. I had penciled in a target of 14.5 for Vodafone Idea, but I would look at a fresh target on the upside. 16 is where I would place a fresh target, stop loss at 13.
Okay, all right. One of the big buzzers as well in trade is a KRBL. They've delivered a mixed Q1, exports heavily impacted by West Asia, which led to the decline in revenue. But you saw a very decent margin picture coming in, and we spoke with Ashish Jain, who's the CFO at KRBL. He reiterated that despite a mixed quarter, domestic demand continues to remain buoyant. Listening to what he said, we'll slip into a break, come back, talk more. Stay with us.
So in India, our revenue actually grew by 14% on a year-on-year basis. However, exports were impacted. So for Basmati, for us as well as for the country as a whole, Middle East is really the largest market. Middle East accounted for 70% of total Basmati exported out of India for the country as a whole. And for KRBL also, it's a major market. Now, because of the West Asia situation, access to that region has become difficult. There is uncertainty around the whole availability of shipping infrastructure as well as freight rates. So freight rates between Feb and August of this year have gone up by 4 to 5 times. Now, because of this situation, export to the Middle East region has gotten affected for us, but we are hopeful that as the situation normalizes, it'll pick up back again. So the key reason for revenue is really the export side, and that too within the Middle East. Domestic demand continues to be buoyant. We've said earlier, and I don't mind reiterating that we are looking at least low double digit growth for the domestic business for the foreseeable future.
Welcome back, and we're joined by Chokalingam Narayanan, who is from ICICI Prudential AMC, joining us this afternoon. Great having you here, Mr. Narayanan. Let's start with regard to the trends that you're seeing currently, and earnings have by and large been quite strong, right, for Q1. Do you believe this is structural? Can this sustain? And is this something that we can expect for the rest of FY27 and through FY28 as well?
Thank you, Harsh, and a very good afternoon to all your viewers.
Very good afternoon.
On the aspect of earnings, I think, as you rightly pointed out, the earnings season is kind of coming to a close, but it's been pretty strong. At the outset, a lot of us expected the season to be a little lackluster, given that war had started having an impact, and possibly some of the supply chain impact would have been felt. But thankfully, as we've kind of gone through the season, we've seen that that has actually gone past quite well. While we've had a little bit of impact on the volume side, I think the pricing impact has been better, and as a result, we've seen margins kind of holding up reasonably well across most, at a composite level. But there have been few sectors where the margin impact has been a little, pronounced. But that, I think, with a little bit of push pass through over a period of time, that should also kind of come through. So net, I think the economy is kind of reasonably in good shape. We also had, if you kind of looked at the monetary policy, the GDP estimates kind of being increased slightly. So to that effect, I think at the earnings level, things are okay. When you kind of look at it between large cap, mid cap, and small cap, you will see that the earnings growth has been slightly more pronounced in the small cap space, followed by large cap and then mid cap. But some of these numbers are slightly distorted by inventory gains or inventory losses, which are also sitting in some of the numbers. But outside of that, I think when you kind of look at it at an overall level, things have been actually reasonably good in actually the mid to high teens. So that's actually a good outcome. I think start of the year we were between the 15 to 18% handle as far as earnings for the different indices are concerned. I think that's kind of holding up as of now. So as long as that volume momentum kind of sustains, we should be reasonably okay.
And where has earnings surprised you on the upside? If you can give us that perspective, any sector, segment, pocket?
So when we look at it at a sectoral level, it's been when you kind of look at metals has been decently okay, textiles has been decently okay. We've had reasonably good numbers coming from banks as well. Consumption side, when you look at consumption of services, what we call as experiential consumption, that side has been reasonably good. Oil and gas has been better than expected, given that people were expecting higher inventory losses that did not come through. Thankfully, the refining margins were reasonably holding up better. So to that extent, things were good. Healthcare as well, the fall was not as steep as what people were anticipating. So that's also been okay. IT services was a little bit muted. On the FMCG side, some of the D2C companies have done much better, while some of the older incumbents have had a relatively muted growth. But even there, if you kind of look at it, F&B companies have done reasonably okay. Financial services, the capital market companies had a reasonable reasonably good quarter. Banks, as we already highlighted, were also better than what we started the quarter with.
Okay. Anything that you're liking at this point of time? Give us some color. What exactly is it that you're liking, you're buying in the market right now?
So we take a slightly more longer term orientation when we allocate our funds for our investors. On that basis, we look at typically three things, which are the stocks that offer earnings growth, ROE improvement, and risk reward. This is our framework. We use our internal investment framework called BMV at ICICI Prudential Alternates, and this is a time-tested philosophy that's kind of held us, good through cycles. When we look at 1, 3, and 5 year rolling periods and outlook-wise, areas where we are quite constructive about is one, textiles, metals, auto anchors. You can say in some sense, some of the old economy sectors in that sense, they are actually doing, they're looking pretty, well poised. The reason is possibly that supply chains are shifting, and today globally, as world is looking a little more insular, you're seeing the creation of alternate supply chains, and when those opportunities are arising, there is a case for some of these Indian companies to kind of better participate. And thankfully, the Indian government has also started signing up a lot of FTAs, and some of those are also opening up markets. Historically, we used to have a little bit of uneven competition in some of these areas. I think that is now turning on its head, and that's actually a good thing from the corporate sector. So some of these old economy sectors are particularly looking interesting, and we are more bottom up. So not everything within those sectors looks good. There are still, one will have to be a little more choosy about them. Additionally, the other area where we think, which is slightly more a decadal opportunity, is I think the consumer is moving more from consumption of goods to consumption of experiences. So to that extent, services is something as an opportunity that is, emerging very strongly. So that's again an area where we are quite positive about. But in all these areas, it's not only about the narrative, it's also equally important to have risk reward in mind. So it's not you cannot paint it all with the same brush. So we are looking for that magic combination that we typically call earnings growth, ROE improvement, and risk reward.
Very interesting. I want to touch upon that services piece which you spoke about. How do you play that theme, Mr. Narayanan? Because it's a unique theme which is at play, and it's a niche one, right? So how should one play it?
Let's say, for example, if you want to consume, experiences, then you look at travel. So what are the ways to play around it? You could play it through aviation. You could play it through airport operators. You could play it through travel SaaS companies. You could play it through, retail companies. So these are certain, ways and means that you can kind of participate in the experiential consumption as a theme.
And what about the platform companies? They too are into experience-based events and services. Do you play through that, or is that still too small?
No, so they are equally important. They are also another channel of retail. So like I highlighted about retail, it includes, retail in every form. So there are players who are stronger in each and every format. So we have to be looking at them on a bottom-up basis. So it's not every name within that bucket that looks great. Some are executing better, some have better return ratios, and we'll also have to be mindful of valuations. So that is where we look at it. So we do have some of these names in our portfolios in pretty much, I would say, every format.
Wonder how you're looking at consumer durables and whether that's a theme that's looking interesting. You've got an LG Electronics, good set of numbers, some bit of margin recovery which is visible, 8.5% higher that stock price. But along with it, the numbers were not half bad, right? A Crompton, the stock has been languishing for a long period of time. Now, I know you don't discuss specific stocks, but the theme as a whole, is that something where you could see earnings momentum sustain and a bit of a re-rating, which could be on the card, just given risk reward?
Yes, it's a very interesting space, and as the wealth levels in the economy kind of improve, you will see increasing need for durables as a category. But here within this category, what we've been always grappling with is there is no one company that's kind of consistently kind of grown or not grown. The competitive intensity kind of tends to be on and off. So to that extent, I think pretty much in every category there is higher fragmentation. So that's one area, but there is one level, lower, which is at the integration level. If you kind of look at it, there are some contract manufacturers in which we've from time to time participated. That is one way of looking at it. But then in some of those contract manufacturers, working capital has been a bit of a issue. So which is where we need to balance both. So when we talk about at ICICI Prudential Alternatives, when we talk about earnings growth, ROE improvement and risk reward, this is what we mean. So while we might like the theme, we need to balance that with whether the that magic combo is available or not.
Okay, interesting. Thank you so much, Mr. Narayanan, for coming in and speaking to us. Very good having you.
Thank you.
All right, time to slip into a very short break. Come back, talk a little more. Plenty of buzzers there. Technocraft is one of those, 7% higher. LG Industrials is an interesting space which is playing out, and we'll try and get a perspective of that with our guests on the other side. Stay with us. Welcome back, and Anurag Joshi here because Tata Sons is stepping up the process to identify the successor to N. Chandrasekaran, with a potential selection panel now taking shape. Sources indicate Noel Tata could chair the panel, with names including Darius Khambata, Bhaskar Bhatt and Harish Manwani also in the frame. Anurag Joshi here with more.
Sir, Dorabji Tata Trust has passed a resolution initiating the setting up of the selection panel that will appoint the successor to N. Chandrasekaran when Chandra steps down in February 2027. Now, according to the Articles of Association of Tata Sons, the composition of this selection committee has to be that 3 of the members need to be jointly nominated by the 2 key trusts, Dorabji Tata Trust and Ratan Tata Trust, and 1 member has to be a director of Tata Sons and 1 has to be an external member. So in terms of the situation now, Sir Ratan Tata Trust is barred by the Charity Commission of Mumbai from holding meetings and making any important decisions. So the onus clearly falls on Sir Dorabji Tata Trust. And if we look at the names over there, the most probable candidate who can head the trust, the selection panel, will be Noel Tata. And there are 2 other names which sources have indicated could be probables to joining the selection panel, who are Darius Khambata and Bhaskar Bhatt. In terms of the Tata Sons member who can be part of this panel, that could be Harish Manwani, sources tell us. Harish Manwani is the chairperson of the Nomination and Remuneration Committee of Tata Sons board. And there will be an external outside independent person. Now let's quickly take a peek into the previous 2 selection panels, the 2016 selection panel that chose Chandra as the chairman in the aftermath of the ouster of Cyrus Misri. So that panel had Ratan Tata, Venu Srinivasan, Amit Chandra, former diplomat Ronin Sen and Lord Bhattacharya. Going back even further, in 2010, the panel that chose Cyrus Mistry, that had N.A. Soonawala, Shireen Bharucha, R.K. Krishnakumar, Cyrus Mistry himself. Cyrus Mistry in 2012 was named as the chairman of Tata Sons, and Lord Bhattacharya. Now, the most curious question about who are the most probable internal candidates for the post of Tata Sons chairman. Now, we have to look at it from the time, the service life of the key leaders in Tata. And if we look at those which have more than 5 years of remaining service life, that is PB Balaji, CEO JLR, and Sailesh Chandra, MD and CEO of Tata Motors Passenger Vehicles, both are in their 50s. And internal candidates with remaining service life of 3 to 5 years. TV Narendran, Managing Director, CEO, Tata Steel, he's 61. Selection panel, what will be the key qualities it will look for? It will look for an astute leader who has the ability to run a group which is as diverse, as mammoth, and as complicated as the Tata Group. High execution skills of getting a quick turnaround of the capital-intensive projects, and a vision for the newer businesses which the Tata has invested over the past 3 or 4 years, and that includes lithium-ion batteries through Agartha's semiconductors, and also the electronics business, which is partnered with Apple for assembling iPhones.
Okay, thank you so much, Anurag, for that. That's of course the evolving story with regard to who succeeds N. Chandrasekaran. And while we are at it, Kunal, I'm curious to know, any Tata Group stocks looking interesting at this point?
Well, Tata Motors, PV and CV, both of them are looking attractive. TCS is something which I think looks attractive at the current scale. We've been bullish on the IT stocks and counters over the last 1.5 odd month. So I think that this could be a good opportunity to try and nibble into TCS. But purely from a medium to long-term perspective, that's a time frame. Titan, on the other hand, I would sense that maybe I think closer to 5,000, 5,300, the stock is going through a little bit of a saturation, or in terms of overbought on nature on the indicators. So I'll probably give it a pause. These are the few stocks which I believe continue to look attractive.
PV in particular, that knock of 5% on the stock, you buy at these levels, you wait, what's the kind of the kind of levels that one looks for, Kunal, in Tata Motors PV?
I think current levels itself is a good level to try and initiate a buy, because it looks like that the worst for the stock could be behind in the near term. There could be, of course, some bit of a minor residual sell-off. The stock may come back towards retest the previous supports of 320 thereabouts. But then after such a kind of a brutal correction the stock has seen over the last 1.5 odd year, and the last 6 months of underperformance of Tata Motors PV with respect to many of its other peers in the auto group at large, I would sense that this could be a good opportunity for medium to long-term investors to try and look at Tata Motors PV constructively.
Okay. All right. So that's with regard to the Tata Group. But while we are at it, let me also bring on board Rajesh Palvia, take his views. Rajesh, of course, from Axis Securities. Rajesh, very good afternoon. Good having you here. Just speaking about the Tata Group names, which are looking attractive at this point. Tata Motors PV, today this knock of 5%, attractive buy price at 330, you reckon?
Tata Motors CV?
PV, Rajesh.
Okay. So Tata Motor PV has corrected from recent swing high, which was at around 355, and now stock is quoting at around 330. So looking at the passenger vehicle, we still feel that there is further more pressure we could see in the near term perspective until the stock not able to take out above 360 mark. I think a trend is still likely to exhibit slightly on the consolidation side. On the lower side, the major support is placed at around 315, 320 zone. So I think range bound activity is likely to be there for some more time. So 315 is a level. If it comes around those level, one can look to buy here.
All right. So that's the take. Rajesh, very quickly on the index, what's the view? What's the call on the Nifty?
So Nifty is almost trading around its 20-day moving average support area, which is at around 24,300 zone, and looking at the put-based concentration, which is also at 24,350, 24,300 strike. So I think here Nifty is trying to find some support at 24,300. If at all Nifty breaks below 24,300, then possibly we may see furthermore, liquidation, and then Nifty can slide further. But looking at the broader market activity, we believe that Nifty is likely to hold these level, and once Nifty able to take out the major supply zone of 24,450, then we could see some further more upward momentum. But I think next couple of days would be we may see some consolidation action to remain in the system. Bank Nifty is also witnessing supply pressure at 57,700, 800 zone. That's the immediate resistance area. So here also we are not able to take out the major supply zone. So both indices are in consolidation, but in last couple of days, resistance have shifted slightly lower. So earlier it was at 24,600, 700 zone, but now it has shifted at 24,450. So range is shrinking day by day for Nifty, but one needs to focus on the stocks, as stock specific action is giving opportunity on the long side of trade, and that can be a immediate strategy for trader in the near term setup.
I want to, in fact, go across. Ashesha has compiled something, and something very interesting, in fact, from a research point of view. Now, given that there is this process of identifying the next group chairman of Tata Sons, the successor will inherit, of course, a very demanding agenda beyond, of course, the larger leadership role. From sustaining growth across key listed companies to improving returns on capital-intensive investments. The new chair will have to balance execution along with transformation. Ashesha here with more and where the turnarounds will really be required. Ashesha.
Well, yes, now that N. Chandra has said that he does not seek reappointment and his term will end in February 2026, let's put the spotlight on key challenges that the successor will now have to face going forward. First, of course, will be with respect to maintaining the growth momentum with respect to its existing businesses. Efficient capital allocation will be another challenge for the successor. Let's talk about the growth momentum, especially for the existing businesses. Tata Motors, TCS, Tata Consumer Products, Tata Steel, Tata Power, and a couple of other new businesses, and how Tata Group manages to sustain the growth trajectory for each of these legacy and new businesses will be very crucial. Let's also talk about recent investments. They've done massive investments across semiconductors, batteries, electronics, electric vehicles, and so on and so forth. And maintaining the kind of growth momentum that was earlier envisaged, even for these new businesses, will also be very important. Let's also talk about renewable energy, the new business capex versus capital intensive industries that the company is already in, that the group is already in, whether it is Tata Steel or Tata Motors, and the kind of return on investment these new businesses versus the traditional businesses will earn will also be very important. TCS, of course, this is the biggest profit generating segment for the Tata Group companies. And remember, balancing AI and the fact that we are seeing a disruption in technology sector will also be very important. And maintaining the kind of growth rate TCS has reported for the last several decades will be very important. Air India turnaround, of course, will be another factor that you need to watch out for. Remember, Tata Group reacquired Air India in 2022, and after that, turnaround clearly has been very challenging. The company and the group aims to focus on fleet expansion, operational transformation, safety upgradation, especially after the June event that happened last year with respect to Air India, and maintaining global scale will also be very important. So Air India's turnaround clearly will be one of the key focus areas for the successor as far as Tata Group is concerned. Let's also talk about new businesses, especially the ones which are loss-making currently, whether it is Tata Digital or whether it is Tata New. There is no clear path to profitability for both of these businesses. In fact, Tata Digital's FY26 loss widened to nearly 5,000 crore rupees. So what will the path to profitability look like for both Tata Digital and Tata New will be very important. Last but not the least, let's also talk about governance, especially because the group has faced several governance issues over the last 2 decades. Maintaining the fine balance between Tata Trust and Tata Sons will be very important. And along with that, we also have a couple of other operating companies. Most of them are listed. So any kind of governance related issues should not happen in the future. That is also one other factor that you need to watch out for. So clearly, successor of N. Chandra will have to focus on all these priorities over the next few years.
Thank you so much for that, Ashesha. And we continue to stick with this new space. The next chairman will obviously inherit what the group has already embarked upon, especially the aggressive capex plan from semiconductors, electronics to batteries and new age businesses. The key question will be whether the successor can maintain that momentum while driving faster execution and sharper returns from these capital intensive bets. Listen to some of the top voices on this matter.
To be the chairman of Tata Sons is quite a challenging thing to do because you are in so many different sectors. So you need a person who has some knowledge or some familiarity with the different sectors, or at least an ability to learn quickly the different sectors, because the main job of Tata Sons is really maintain the culture, champion group-wide initiatives, but most importantly, reorient the portfolio for the future.
If a person takes over, obviously the complexities are so huge, and the number of units or number of industries which are within the Tata Sons fold are too numerous and too varied. It's going to take some time for the new person to really understand the business in its entirety and take a view as to how to steer the ship forward.
What happens to succession? Succession in this country is a malaise. We all believe we are immortal, and it is no one's fault. It is not Chandra's fault. It is not Noel's fault. The board of Tata Sons is also not at fault. They will do what they feel is right. Please remember, the Tata Sons board today has some, senior heavy hitters. So, and they're a responsible board, as all boards at that level of that order need to be. So I'm not worried.
I guess the board will now need to address this on priority, including the major shareholder, which is the Tata Trusts. So one will be looking forward to seeing what statements they will issue and what actions they will now take. So I have to say I'm quite surprised at the turn of events. And we will have to see what comes up next and to what extent the finality of this decision is established. The board has to presumably accept this resignation and then indicate what the next steps will be, including possibly the appointment of a successor and a plan for selecting such a successor.
Welcome back, and Rajesh Palvia with us. Rajesh, thank you for bearing with the long wait, but quickly give us the sectors that you're liking at this point in time, Rajesh, in the market.
So Harsh, I think stocks from the automobile space are still holding the strength, and we believe that furthermore continuity of uptrend would be there in automobile, be it two-wheeler, four-wheeler space. So I think from two-wheeler space, one can focus on Hero Motor, Eicher Motor. Both stocks are looking attractive. The way Eicher Motor is now inching towards all-time high trajectory here, we could see a further higher level towards 8,400, 8,500. So buy and accumulate would be the strategy. Again, Mahindra and Mahindra is also looking promising. The way stock is comfortably holding about to 3,400 level, and I think the stock already given a breakout on a daily, weekly time frame. So if it's sustainable 8,400 level for some more couple of days, I think we could see further up move 8,550 to 8,600. We are expecting target in Mahindra and Mahindra. So auto as a pick we like at this juncture, and pharma is also looking promising. So some of the stocks from the pharma space, one can focus on stock like Aurobindo Pharma, Divi's Lab, Glenmark Pharma, all these stocks are holding the strength and comfortably holding about to 20-day, 50-day moving average. And whenever minor dips are coming in the market due to volatility, these stocks are, showing sustained buying action. So from pharma space, I think one can focus on these three counter also. So I think auto and pharma, these two are clearly on the winning side of trade on the technical perspective.
Okay. And Rajesh, your top couple of picks for this afternoon and maybe next week of trade?
So I think APL Apollo has managed to give breakout on a weekly chart, and very strong bullish candle is taking place on a weekly chart. This is the second consecutive week where stock is showing strength, and I think we have discussed this stock earlier also at lower level. But the kind of buying interest we are seeing in this counter and long built up is clearly there in the data. So we are projecting target of 2150, 2180 for APL Apollo tubes, and on the downside 20501 needs to keep as a stop loss. Another stock, as I mentioned, that Glenmark Pharma one can focus on. Here also we may see momentum to continue as the stock is already broken out. It's a falling trend line on weekly chart, third consecutive week where stock is making higher ILO formation. So here also strength is there. So Glenmark may extend upward momentum. 2360, 2380 would be the next target. On the downside, 2275 needs to keep as a stop loss. So these two stocks one can focus on.
Rajesh, today clearly the stock of the day is LG. I mean, what a move, right?
Yeah.
Such a strong move. What do you do if you're a holder? Do you square your position? Do you add a fresh position? Which way?
So LG India is in our coverage also, and we are holding a bullish view for long-term perspective also. So we do hold our bullish view for this counter. Buy and accumulate would be strategy. Though stock has moved up quite sharply in this week, around 8.5% gain stock has registered. But after a long consolidation, stock managed to give breakout of this consolidation range on a weekly chart. We believe that 1850 to 1900 would be the next trajectory for the stock on the higher side. So we advise here to buy and accumulate. On the downside, one needs to trail stop loss higher, slightly higher to 1660, and target is 1850 to 1900.
Okay. Rajesh, with that, we'll let you go. Thank you so much for coming in, giving us your views, and really appreciate your time. Okay, we'll slip in a very short break, come back. Kunal, of course, will be with us, continuing to be with us, and then we'll have Siddharth Khemka as well joining us later after this very short break we'll take. Stay with us, plenty to speak about.
Back with closing trades right here on ET now, and it's turning out to be the quietest of trading sessions, at least for the index. But I mean, having said that, it's always the case. The picture, of course, is a lot different. It's a bit of a tug of war. You've got a Tata Motors PV on one end, which is down nearly about 6% on the futures now. Jio Financials, which is down 2%. Asian Paints, ONGC, SBI are some of the key drags. On the other hand, Apollo Hospitals, I think, is more than made up for all the losses that it had when the Parliamentary Standing Committee made its recommendations on tariffs. Apollo Hospitals up 3.5%. Adani Enterprises almost notching a 3% move. Similar is the case with the Adani Ports. And then Bharti as well, which is up a solid 2.5% as we speak, along with Idea, which is also notching almost a 5% gain. But the other winner today in trade has been LG Electronics, reacting to its numbers. So let me take it across to Snehi, not for the earnings, but how the brokerages have reacted to the earnings.
Well, yes, so good set of numbers, a beat coming in on EBITDA, PAT and margin, and we're getting a lot of positive verdicts from brokerages also on the back of these numbers. First, you've got Nuvama coming in with their view wherein they've maintained the buy rating, but the target price has been hiked to 1,910 rupees from 1,820 rupees earlier, so this looks good to them. For CLSA too, while they continue to maintain their accumulate rating on the stock, the target price has been hiked to 1,865 from 1,830 earlier, so the 35 rupees price increase coming in
in from CLSA in terms of the target price, but looking good to them as well. ICICI Securities continues to maintain a buy rating on the stock. The target price has been hiked significantly to 1,815 from 1,775 rupees earlier. So good a target price hike over here, as has been the case with Morgan Stanley, wherein they maintain an overweight rating on the stock with the target price hike to 1,814, all the way up from 1,610. So that's almost, in fact, slightly more than a 200 rupee target price increase coming in from the house of Morgan Stanley on the back of these numbers that we've seen. Then let's talk about the set of brokerages that continue to stay bullish on the stock, but there has been no change in their target price or their rating. That's Jefferies, Nomura and Axis Capital. All three of them have maintained their buy rating on the stock. For Jefferies, the target price is 1,810, Nomura 1,763 and Axis Capital 1,746. So that's the verdict coming in from brokerages on LG Electronics. Strong set of numbers, and that is something that the brokerages are also cheering in trade today.
Hey, thank you so much for that, Snehi. Let me also bring on board Siddharth Khemka of Motilal Oswal to give us his perspective. Siddharth, very strong numbers from LG. Now, this margin recovery that we've been waiting for has finally arrived. In fact, that surprise margin dip has been reversed. Let me put it slightly differently. How are you looking at LG's numbers, and what's the Motilal view?
Hi, good afternoon, Harsh. I think after listing, and we have seen a dismal FY26, FY27 for LG has started on a strong note. Q1 revenue growth of 15% and margin expansion helped EBITDA improve 26%. What we have seen is that growth has remained broad-based, as well as if you look at across segments, be it washing machines, premium doors, premiumization across segments, and LG with its leadership has finally started delivering the numbers it promised. Even going forward, we expect with the Q3 onwards, the festive season demand should remain strong, and we expect a mid-teen kind of revenue growth and a double-digit kind of EBITDA margin, leading to supporting the overall earnings growth of about 35% in FY27. So with that, we believe that the valuation uptick could continue, as the stock has largely remained sideways to marginally under pressure post-listing. With this kind of performance and a positive outlook, we believe the stock could do well. For now, our target price was around 1,800, but since the call was there today, and we will be revising our estimates as well as target price, I think, late today evening.
Okay, all right. Got your point, Siddharth. Kunal, I wonder what the view on LG is, and is this one of the top-rated names within consumer durables that you would look at?
Yeah, it looks like now that after this breakout, the stock could come back into its own, because this is a very strong, solid, and a much-needed breakout for LG Electronics, because the stock over the last, I think, 4 months was stuck into a 150-point band, 1,500 to 1,650 thereabouts, and the stock was trading into a more of a volatile fashion within this 150 or a 10% band approximately for LG. But I think after this breakout today, the volumes being exceptionally high, one of the best volumes the stock has clocked today on the daily charts, and this indicates that we are looking at a breakout of sorts for LG. The only concern over there is that many a times we've seen that when stocks give such kind of a strong thumping up move, they remain sideways for the next couple of days. The volume drops down for the stocks, the momentum slips down, and then these stocks go into a gradual uptrend further. So near-term wise, maybe I think for the next couple of days, the stock might see a bit of a consolidation. But today's breakout is very strong. This opens up legs for almost 1,800 to 1,850 plus for LG India from the current levels.
Okay, that's the take coming in on LG Electronics and how that stock has been. Telecom, of course, is that key story which is holding out today. Bharti 2.5% higher, Idea as well following in tow, another 5% off an uptick. And just wanted to get your sense in on, the telecom sector, Siddharth, because, I mean, Bharti has been one of those very stable names, right? Consolidated off late, of course, but having said that, it's been one of the key leadership, core portfolio kind of names. Having said that, now with all the tariff changes that one is seeing actually happen and Bharti actually taking the lead, would you say that you can add positions at Bharti even at these levels?
So yeah, I think definitely the entire telecom space has been consistently delivering strong numbers. But I think the tariff hikes, or you can say the price hike, that has remained eluded for some time now, and that has been the core reason for the sector stocks to remain kind of consolidating. But if you look at Bharti consistently delivering strong growth quarter after quarter, ARPU seeing improvement because of the customers uptrending, and very strong cash flows performing both in India as well as Africa business also showing strength. Now I think Bharti has taken a unique step by reworking the plans that are available, and in a way, without increasing the prices, just making the higher packs available, has effectively kind of taken a price hike, which I think the market has taken positively. So definitely a stock worth looking at current levels. A long consolidation has been a market leader. I think whenever the Jio IPO comes, that would be another additional trigger for the telecom sector, given the kind of valuation Jio is seeking compared to Bharti, where the profitability is much better. And hence, we see that overall, the core business doing well, the digitization helping its newer business segments, as well as other market triggers looking pretty strong. So we continue to remain positive on Bharti. We have a buy rating and a target price about 2,335.
Right. Okay. That's the take coming in on what the telcos, of course, are throwing up in today's trading session. But Galaxy Surfactants, that also has been quite the active stock today and has delivered a standout first quarter as well, beating the street estimates. In fact, Snehi joins in back to talk about how the quarterly performance was. Snehi?
Absolutely, a very good quarter coming in for Galaxy Surfactants this time around. More than the strength in the numbers, it's the management commentary wherein they've hiked their guidance going ahead, and that's the reason why the stock is locked up in upper circuit of 20%. Just decoding what these numbers look like on a consolidated year-on-year basis, the revenue is up about 40%, EBITDA has more than doubled, net profit has also doubled on a year-on-year basis, and we've seen very stellar 430 bips expansion in margins to 14% when the estimate was just 10%. So a beat on all fronts. Overall volume growth has been in mid-single digits. However, what really stands out is that the India business has returned to double-digit volume growth after nearly 2 years. So positive here. The rest of the world has clocked in mid-single digit volume growth, and their Africa, Middle East and Turkey business, they saw some low single digit year-on-year decline in volumes on the back of geopolitical action, but sequentially it's a high teens volume growth coming in over there too. Mid-single digit volume growth for the performance surfactant as well as specialty care segment, so that looks good. Now let's get to the crux in terms of the management guidance. While FY27 volume guidance of 6 to 8% has been maintained, what looks good is the EBITDA per metric ton guidance that has been hiked to 24,000 to 25,000 rupees per ton now, from the earlier 19,000 to 21,000 rupee guidance that the management has given, and that is something that has got the street really excited. They've announced additional capex of 150 crore in FY27. And what adds to this momentum is that they have also said that they're not seeing any pricing pressure for now. So bunch of positives in Galaxy Surfactants earnings as well as management commentary, and that's why the stock is up 20% as we speak.
Okay, thank you so much for that, Snehi. Siddharth, I wonder how you're looking at this one, and what would be the ancillary beneficiaries of this kind of tailwind, because the numbers clearly looked extremely strong, even when we look at the first glance at the numbers as well.
So yeah, I think Harsh, the entire specialty chemical space, you look at across the segments, have reported strong numbers, be it Atul, be it Deepak Nitrite, be it Navin Fluorine, and now Galaxy Surfactants. Again, for Galaxy, FY26 very dismal, but started Q1 on a very strong note. I think key important factor to note here is that margins have seen some sharp improvement, and plus with the improving outlook, I think there would be a lot of upgrades in terms of estimates, and valuations are still comfortable, and hence we believe that this can be one of those stocks where in the chemical space where upside could be again increased going forward. What we like within the overall space, I think Navin Fluorine consistently delivering quarter after quarter, strong Q4, FY26. Q1 also started on a strong note. Something which is showing recovery again, Deepak Nitrite, one of the stocks which has been seeing a lot of correction and now again showing strength. So some of these will be kind of, I think, bottoming out kind of picks, while Naveen continues to show strong performance.
Okay, that's the take coming in right now on some of those select stocks. Just looking at what the market texture as well is like. And, curious to see what's really happening within metals, Kunal, because after that big bump up, you're seeing some of these metal names completely unwind their gains that they made in the, in the first half of this trading week. Look at Inalco, for instance. It's down a good 6% today.
Yeah, I think Alco is the only one which has been falling very sharply. But I think most of the other stocks, I was looking at Hindalco, that stock has seen a good recovery from the intraday lows. The candlestick pattern today is very bullish. It's like a bullish hammer pattern being formed for Hindalco on the DD charts. Tata Steel has managed to come back towards the retest of the previous lows. I think the last month low was around 180 for Tata Steel. The stock has come back to that level on an intraday basis. JSW Steel has come back towards the 50 moving average. Sale also, I think, has come back towards a retracement on the 170 mark. So I would sense most of the metal counters have completed their phase of mild correction. Now I would sense that potentially start of next week or maybe from the mid of next week, there could be a second round of rally which could start off from the metal pack. So would be bullish on the counters. Hindalco, even Tata Steel now currently, in fact, at 180, looks to be one of the stronger bets in terms of risk reward.
Okay, that's the take coming in on some of the metal names and where they're standing off in trade. Apollo Hospitals, that of course, I don't know on a net basis this week how the stock is performed, because start of the week you had that scare come in from the Parliamentary Standing Committee on a cap perhaps on hospital tariffs for average rooms. And that really took a knock first. And then Apollo Hospitals came out with a very steady set of earnings. And since then, you've seen a rebound come in the stock in the last two trading sessions. So that, where do you stand now when it comes to healthcare as a pack?
I think if you look at some of these companies, Global Health, which is Medanta, Apollo Hospital, some of the others which are not under coverage but Rainbow Child, they put strong numbers. Now, the only overhang that remains is the regulatory risk, which you highlighted a couple of times, that what the government can do in terms of regulating the prices. Beyond that, I think some of these hospitals, they are maturing because the past capex is now looking at turning around and adding to the profitability. If you look at specifically Apollo Hospitals, I think management is guiding for a 20% hospital revenue growth. The established hospitals EBITDA margins at 26% are expected to sustain, while some of the newer hospitals, they are likely to add to the overall profitability. So we continue to remain positive both on Global Health, which is Medanta, and Apollo Hospitals from a long-term perspective, even if we believe that the government could kind of limit the prices for some of the businesses or some of the surgeries or treatments. I think on the longer-term trend, the demand for healthcare services and plus some of the lifestyle diseases that are increasing, where the likelihood of this policy action is less, should drive growth going forward.
Okay, time to take a bit of a breather. We'll swim in a very short break, come back, talk more. Stay with us. Welcome back, and one set of stocks which have actually done quite well this earnings season. It's been mixed bag, but there are a certain section of industrials which have actually done very well this earnings season. And today, at least in particular, there's Technocraft and there's LG. Both of those stocks are high flyers, 5% plus. Siddharth, I wonder, from the industrials pack, any favorites at all?
So yeah, I think some of these industrials, actually, if you see Q1 is generally the weakest quarter because Q4 to Q1, but still we saw a lot of companies within the industrial. So there are sub-segments, be it your defense, be it your electronic manufacturing, be it some of the power T&D companies. I think across space, some of the companies have come out with good numbers. Execution has been strong, order inflows has been good. Some of the stocks that we like within the space, Kirloskar Oil Engine, that continues to do well. Siemens came out with very strong numbers from that space. Unfortunately, Technocraft and LG not under our coverage. But I think within the EMS space also, the Sirma as well as Avalon, these two companies came out with strong numbers and continue to remain our preferred ideas.
Okay. In fact, analysts have been seeing quite significant upside across large, mid and small cap stocks over the next 12 months to come, with some counters offering more than 50% potential upside from their current levels, according to brokerages. While large caps, of course, offer relatively steady upside, the biggest potential gains are concentrated in mid and small caps. Ashesha is here with all the insights.
Well, yes, so the Nifty 50 performance over the last 1 year has been muted, although the mid-cap and the small-cap index have given 13 to 13.5% returns over the last 1 year. But the important question now is, which stocks are analysts most bullish on for the next 12-month period? And let's start with Nifty 50 constituents. HDFC Bank is at the top of that list, where analysts see 54% upside from the current market price. That is followed by HDFC Life, SBI Life, Axis Bank and NTPC, where analysts see return anywhere between 42 to 52% on these four stocks. So these are the 5 Nifty 50 stocks which analysts are most bullish on for the next 12 months. Let's also talk about broader markets. This is one space where we have already seen outperformance over the last 1 year, and some brokerage houses continue to remain very bullish on something like Patanjali Foods, where the target is 554, 54% upside from the current market price. This is followed by Vishal Megamart, Hoodco, Swiggy and UPL, where analysts see returns anywhere between 45 to 55%. Let's also talk about the small cap basket, HBL Engineering. This stock is at the top of their list, where analysts see nearly 54% upside with a target price of 1,050 rupees per share. This is followed by a couple of other counters like Inox Wind, Great Eastern Shipping, NBCC and Chola Investment. Analysts see nearly 42 to 50% upside on all these counters. Remember, same time last year on the 15th of August, Prime Minister Narendra Modi made some important commentary with respect to GST rationalization, and since then, Indian economy continues to remain resilient, although there have been challenges with respect to West Asia and global crisis that Indian equity markets have been facing. But these are largely the top stocks analysts are most bullish on from the Nifty and the broader markets over the next 12-month period.
Okay, that's a list of stocks with highest return potentials. Siddharth, I'm just wondering, given how the last 1 year has been, do you also believe that perhaps the largest potential still lies within the mid and small caps as opposed to large caps?
So I think the answer clearly lies in what Q1 actually Q4 and now Q1 results clearly show. So if you look at our coverage universe, mid caps, the performance grew almost 25%. The small caps earnings grew about 32%. Compared to that, if you look at the Nifty 50, and these numbers are excluding the oil marketing companies or the commodities per se. So large caps have grown at about, so the Nifty 50 companies earnings has grown about 14% compared to our expectation of 10%. So the earnings momentum is clearly with the broader market, both mid as well as small cap stocks. But what differentiates this market is that this is not a broad-based rally that you will see. You will see very selective stock-specific action within sectors also, companies which are delivering strong earnings growth, plus they have a positive outlook where there I think is where the market is willing to give reward both in terms of the growth as well as in terms of valuation multiple. So clearly I think the next 6 months to 12 months market momentum is likely to remain with the mid and small caps.
Okay. Your favorites, Siddharth? I mean, we just pulled out the consensus favorites and Ashesha presented those. Your maybe top stocks next 12 months or thereabouts, if you can give us a view.
Sure. So again, two set of stocks. Within large caps, I would take two names. For example, Bajaj Finance, we see a 14-15% upside. M&M, Eternal, and Samvardhana Motherson are some of our large cap ideas. Within mid and small caps, we like Lenskart. Within the healthcare pharma space, Emcure Pharma is something that we have been increasingly liking. Sirma SGS Technologies from the EMS space, and within the banking, mid-cap banking name RBL, we believe with the new management in place and now delivering consistent earnings growth, both the again earnings growth as well as re-rating candidate becomes RBL Bank. So these are some of the preferred ideas from the next 6 to 12 months perspective.
And then there's Jubilant, right? I mean, you've seen some very strong numbers coming from Popeyes. I wonder if that's the next growth lever with Jubilant has to rely on, or will like-for-like growth even on the Domino's side of things recover? What are you building in, Siddharth?
So yeah, Harsh, I think again another space which becomes interesting. We recently released a big sector note or thematic note on the QSR space, saying that the turnaround is now visible and it is at an inflection point. We are seeing same-store sales growth improving. Capex intensity has come down, and the store rationalization has helped. So key factors is demand for the QSR is coming back. Profitability is improving, and within them, I think Jubilant Foodworks is something we just upgraded to a buy. Again, as you said, we remain positive from a medium to long-term perspective. There is a 5 to 7% like-to-like growth potential. Popeyes, yes, good numbers and likely to remain the high growth driver, both domestic as well as the international performance. The company is also witnessing a margin recovery, and hence we believe that with current valuations, there is still room for a good upside. So we rate a buy and a target price of 625, so giving a good 25% upside even from current levels.
Right, okay, just counting down to the market close then, 330, and Tata Motors PV. That's clearly been the rank underperformer today. It's fallen about almost 4.5% in trade. And I mean, to think of it, the week has been extremely listless and very, very narrow trading band that we've been pretty much all throughout, with media actually taking the lead week to date with an over 2% move, led by, of course, that exaggerated moves in Z that we just highlighted. Nifty Realty comes a close second with a 1% gain. Other than that, it's largely been a sea of red. So sectorally, metals has been the biggest drag, FMCG, auto, FinServ. For FMCG as well, there was that one odd day with the GCPL, with Sudhir Sitapati said, stepping down when you had that 10% drag on GCPL. Autos, FinServ, PSU banks, IT, Nifty Pharma, Nifty Bank, they've all been laggards for the week. And yeah, Kunal, it's been, I think, one of those very, very quiet sessions. I mean, not to say that the Nifty has not been sideways for months now, but this particular week has been the quietest of the lot.
Yeah, quietest of the lot. I think the range for the index was 300 points this week. We were, I think, trading into a band of 24,300, 24,620. I think apparently is the low and the high for the index this week on the spot levels. And even for the banking index, I think it had been very, very range bound. We were stuck into I think an 800-point range for the bank Nifty, which is just 1.5%. And given the kind of beta nature for the banking stocks, both the private and the PSU banking stocks, these are very mild ranges for the indices. But then I think that's how the nature of the markets have been over the last many weeks. From the month of June itself, we've completed, I think, a phase of almost 40-45 days where the index has been just about hanging around this 24,300 pivot, plus minus 300 points for the Nifty. So I think it's just a phase where maybe I think the action is more concentrated towards the mid caps and the small caps, and complete lack of action, or at least in terms of momentum for the benchmark indices.
Okay, all right. Take a bit of a pause on the conversation while the cash segment is on. I want to quickly try and mark out as to what the moves on over the last maybe 15 odd minutes are as those rates start to settle now. You've got a very, very flat move on the Nifty. So the good part is that there aren't too many gyrations which are visible versus that 315 point where markets were. We're largely status quo. Let me go across, in fact, dive into a break, take a bit of a breather. Also, Siddharth, we'll let you go. Thank you for joining us, and thank you for all of the views. We'll speak to Kunal. We'll have Kunal on the other side. Stay with us.